Yeah, morning, guys. It's a beautiful Wednesday morning, I think, and I'd like to record a video or I'd like to break down or do a review of yesterday's New York session movement on gold, of course. But before we get into it, I'd like to just do a big shout out to my 7 loyal subs and the guys who keep viewing these videos. I know the numbers are still small, but it's a good place to start, and I love the fact that I'm reaching out to someone out there, and I really hope you guys enjoy this content. And like I've been saying, if there's a way in which you think we can improve, you can suggest on the comment section. It's open and free for everyone. So I'll get right into it. So I'll be doing a gold review, and I won't take much of the time because basically I've laid everything out as you can see. I've laid everything out as you can see. So gold yesterday, of course, gold has been bullish. It has been bullish. So this was a Monday price action, then Tuesday, then this is Wednesday. Of course, the candle is still forming. So at really the open of yesterday, at the open of yesterday, uh, price really went for those eyes, and that was during the Asian session. It went for the open of the Asian session at down here. This is let me change. This is the Asian session open. I'll change the time to East African time so that it can be clear for everyone. Yeah, so at around midnight, the open of the market and really the price went up. That was really the Asian session pushing the price higher to sweep Monday's high. So Asian session was really bullish. The Asian session was really bullish yesterday. It started down here, then pushed higher, pushed higher, taking out the Monday's high. Now, this is the 8:45, 8:45. This is 8:45 a.m. East African time. This is the London pre-market now. These highs were set during the London pre-market, but remember that time the Asian session is still active because the Asian session runs from uh, 3 a.m. there to around 12 p.m. East African time. But of course, the most active session on the Asian session is around volatility peaks from 4 a.m. to around 5, 6 there. The volatility start wearing off. But still, till 12 p.m., we still consider it as Asian session, though the volatility is down. So these highs were created during the London pre-market. So the London pre-market, after taking these highs, the Monday's highs during the Asian session, the most volatile part of the Asian session, price retraced down here at 6:30 a.m. Took out this short-term high created, and the bullish activity continued, setting this high during the London pre-market and also still the Asian session. So I marked this zone as the Asian high since the London session had not opened. So the London session basically opens at around 10 a.m. East African time, but the pre-market starts at around 9 there. So this high was formed during the pre-market of the London session. So the London session pre-market price really went down, creating the loss. Yeah, I marked them London loss because this is the part where London starts becoming active, the pre-market from 9 a.m. to 10 a.m. onwards to 11, 12. So these lows were created during the London session, and then a rejection and price consolidated for the better part of the day. Then remember, most of the time London, New York loves consolidation, especially on gold. I've never seen big move during the London session. That's why I try to avoid it in trading gold, unless you are that person who anticipates to just take like 50 pips, anything less than 100 pips. You can really get them during the London session, but you can't anchor your swing trades on the London session. In fact, for gold, when you look at the volatilities, the Asian session is more volatile than the London session. The London session really most of the time is just consolidation around the Asian highs and the Asian lows. The price love dancing around those zones. Then the New York will open and manipulation on each of the, on either of the sides, and we can have a drop or a really strong bullish activity. London, I think the best place to anchor swings is basically the New York session is a good patch. But I always have this power of three where I always take, if gold is going to be bullish that day, you will see a very strong bullish move during the Asian session. Then you'll find a consolidation during the London session, and then during the New York Open, one of the lows gets taken out, probably at the sell side, and then we see a continuation higher. Or if the Asian has been really bullish to premium levels, then London will just consolidate around those levels. Then at the open, the highs of both the London and the Asian session gets taken out, and then we have a New York reversal, just like what happened yesterday. You are about to see that by the on the live chat. So London consolidation happened, and I started my analysis around 2 p.m. East African time. That is around 7 a.m. It's New York pre-market. So at around 2 p.m. I'll drop down to the 5 minute chart so that it can be clear. So at around 2 p.m. around this zone, I started my analysis. Price was in was hovering around a bullish leg range in my view. Price was just within a bullish leg. Was There's something I'm looking for. Okay, so price was just playing around this zone. So price was just playing around that zone during the New York pre-market. So there were two options which I had seen happening. So I had one anticipation that the price during the pre-market goes high, takes out the Asian eyes, and gives me some kind of reversal downwards towards the London lows and the Asian lows. The second scenario was price taking out some lows during the pre-market, then inducing buyers or seeking liquidity on the buy side of the market and then dropping downwards to take out the sell side, which was really rich. The London lows had not been taken out and the Asian lows has not been taken out. And when you see at the 1 hour chart, it was very clear. In fact, the 1 hour chart is the one which gave me that idea. All of this candle, the law of this candle was really very clean. And I remember telling a friend who we were together in the meeting was that this law is very clean. So what really happened during the London pre-market? I'll show you that range in 30 minutes. So in 30 minutes, this was the range which we were dealing with. This range, that was the range which we were dealing with. So this range was the range which we were dealing. So this range is what we are dealing with. So in 30 minutes, it was a beautiful candle range theory. The high of this candle had not been taken out and the low had not been taken out. So price was just playing within the range of that candle. So what happened is that during the New York pre-market, price went down, took out the low of this candle, the sell side, leaving out an open high, a very clean high of the candle, which was also relatively equal to the Asian highs. So that was at the pre-market at around 15:30, around 8:30 New York. The New York volatility now starts peaking from 8:30 because of the economic data and everything towards as we approach the 9:30 open. So, and this low was also in a fair value gap. When you look at the 1 hour, this zone is an order block, so it was a fair value gap on 30 minutes. Also on the 15 minutes and the 1 hour and the 5 minutes, you will see a lot of discount areas there to support price. So there was a drop down here to this zone at the New York pre-market, 8:30 a.m. Then there was a clear inversion on the 5 minute chart, and it was very clear for us that prices were pushing upwards. So even before the 9:30 open, prices were really pushing upward very quickly. I was asking myself, what is really the deal here? So at the open, before the open or close to the open, price really pushed upwards, and all this move was just an inducement to take out this high, to take out the. In fact, it was a liquidity sweep. It was a liquidity sweep to take out this high and the Asian highs created in the morning. Beautiful move. So what really confused me around this zone was the way price behaved after taking out the Asian highs. So the way price behaved after taking out the Asian highs, I was not expecting a very strong bullish close. I was just expecting a weak and probably a reversal. So when the price took out the Asian highs, I thought the sentiment is going to turn bullish, but we saw candles contracting, showing a weakness in the buying pressure. Look at these 15-minute candles. And when you go to the lower time frame candles, like 1 minute, you will see some form of consolidation. So it means that the volatility was really weakening off. Volatility was really weakening off. So this was the pre-market candle and the market open candle. It was a 4 p.m. candle. 4 p.m. still pre-market, then 4:30 open, that bullish activity all the way up. So this high had to be taken out, the high of this candle had to be taken out at first if we were to seek any lower prices, because this was some really bullish activity and that high had to be taken out. When you're trading candle range theories, when you see a bullish candle like this, the market will never leave the high of that candle. It's almost impossible. I'm not saying all the time happens, but the chances are very low. The chances are very low that the high will be spared. If you are going to seek a reversal from such a zone, make sure that the high of the candle has been taken out first before you seek lower prices. So something happened very interesting, and I'll switch to 1 minute time frame because that is where it's very clear. It's very clear at the 1 minute time frame. So at 10 a.m., 10 a.m. open. In fact, this should be oh yeah, yeah. Nine this should be 9 a.m. high, not 9 a.m. low. Sorry. The 1 hour candle, I was telling you it's bullish. Look at how price behaved towards the close of that 1 hour candle around the Asian highs. This was a classic consolidation and contraction in the higher time frames or in 15-minute candles, showing that the weakening of that buying pressure. So this bullish leg was just a manipulation, and manipulation came from the news. I think it was the NFP revision data. So that spike up was just a manipulation, taking out the highs of this consolidation, and then there was an immediate candle contraction in 1 minute, and then there was a bullish engulfing candle showing that sellers were really getting interested again. This market on highs, or all the buy side liquidities now had been absorbed. Everything, everything. If it were to push higher, then it should just open and keep pushing. But this rejection was a clear interest of a selling pressure in the market. Then this happened at the open of the 1704 candle or 1004 candle. That bearish activity. Inversion was very clear here. All these sweep of the Asian highs got invalid by just one candle. And gold is really beautiful. Gold can invalidate 10 candles with one candle. That's why it's always wise to trail your stop loss when you're trading gold closely. So this one candle invalidated all this move, and this was just a clear bearish signal in my view. There was a clean fair value gap there, a very good entry for sales. If you had missed this one, in fact, this was the first entry, but a very risky entry. But this was just a confirmation that now we are in for sales. So this fair value gap got left there in the 1 minute chart. A retest of that gap, rejection. A close below the body of this candle, a retest of that order block or the upward or the this is an order block, a retest of that order block, then price pushed downward. That is around 100 pips, taking out these lows which were created during the pre-market session. Slight retracement to that order block again, Rejection, price continued to dump, taking out the London loss. Slight rejection again, then price dumped further, taking out the Asian loss. And that was really the end of the most active session of the New York. This is the New York PM approaching. This is the New York PM approaching. This is around. This is the New York PM approaching. This is around. This is around 12 p.m. New York time, because 7 a.m. Kenyan time is 12. I think 12 p.m. starts at around 6 p.m. Kenyan time. So this is the New York PM session approaching. So during the New York PM session, in fact, if you are trading and you had seen those moves during the London AM session, or the most active session of, sorry, the New York AM session, or the most active session of the New York, you don't need to trade these at New York PM. But if you have balls, or if you are risking, if you are willing to risk, because I tend to think that most of the time reversals happen during the New York PM, because most of the moves really happened during the AM session from 9:30 onwards there to 12 p.m. That is the time where most moves happen. But if you had the guts to trade this move, still you could have gotten an entry. Look at this bearish move in the 15 minutes. All these move. A retest of that zone, the inversion zone. And look at this candle. I love these candles so much. I call it the absorption zone. There was a selling pressure, and then a candle contraction, meaning that buyers tried to enter the market but got overpowered by sellers. So when I see two bullish, one small candle in the midst of two big bearish or bullish candles, that was a really zone where decision happened. That was a real zone where the sellers or the buyers took over, and it is a good institutional level. So a retest of that zone, market took out the highs. This was around 215 2:15 in Kenyan time. I think that is the afternoon in the New York session, or wherever. I'm not sure. But this is the New York PM session. A retest of that zone, then a continuation lower to take out the 4-hour candle range theory and another absorption zone. I'll show you in the power chart. So, so 4-hour chart was also in play during the whole of yesterday. 4-hour candle range theory was in play. And the basis of that candle range was this candle formed on Monday during the New York session. This was the Monday's New York session high. Price took out that high, consolidated around it, reversal during the New York on Tuesday, seeking the lows of that New York. Look at what is between these two huge candles. One contracted candle, meaning that there was a bullish activity. Sellers tried to enter, got overpowered by buyers. So a very good institutional level for trades to happen. This trade to this zone happened during the Asian session today in the morning. That low got taken out, continuation higher. This low has been taken out, so I'm waiting for the New York pre-market today to see what will be happening. Remember, a very good zone to enter trades in gold. I think I have made that choice, or I have seen that the very best zone to enter gold trades is from 9:30 a.m. onwards. You have a tight window, yes. You have from 9:30 a.m. between 9:30 a.m. there to around 11, but that window is really where the bulk of the moves happened. That window you can anchor swing trades. You can get 100 people move in less than 5 minutes. No consolidation, just pure price action and movement. That is the best zone you can trade gold. This I want to show you the basis of that contraction candles. Look at this zone in the lower time frames. Do you see what was happening here? A classic consolidation, trying a classic battle between buyers and sellers. But who won in the end? The buyers won. Look at this displacement upward. This displacement downward was the first candle, then consolidation, the second candle, or a battle between buyers and sellers, then expansion again, the third candle, meaning the buyers won, good institutional level, the price retests that zone during the Asian session, and then continuation. If you had entered this, you could have secured around 100 pips or so, but I don't love Asian session. I think it remains that gold, the best time to trade is from 9:30 a.m. or from the New York pre-market session onwards. That is the best time to trade gold. Anyway, guys, that was my analysis or my review of what happened yesterday during the New York session. I know it might not be perfect, but each and every day we get closer towards that perfection. So areas which you need to improve, you can comment. The comment section is very open. Also, if there is any concept which you think you might not be getting it, you can comment and I can do a video on specifically that concept. Thank you and see you on the next video, probably tomorrow on another review of gold.